Welcome to the channel. Leo never loses. Today, I'm breaking down the anchor system, my custom built strategy for high yield domination. No NAV erosion, no drawdowns, just smart, calculated moves. It took me 8 months to build and perfect this system, and now I'm using it to grow my portfolio to $1 million and beyond. Now, quick disclosure, this is not financial advice. I'm not a financial advisor. This is my anchor system, a strategy I developed through research, experience, and real results with YieldMax ETFs. If you're thinking about doing something similar, make sure you do your own research and trust your own process and build a system that fits your goals. This one works for me. So with that said, let's get down to business. So let's go. Today, I was up today, almost 60, but no worries, we'll get there. Anyways, before we get there, total return, right there. Everyone's in the green, except Maro. I got her last week. This Wednesday I got her. So anyways, let's go what we're here for. Right here. These are my rules. The anchor system for dominating high yield ETFs. No NAV erosion, no drawdowns. All right? Now, if you find value in this video, subscribe to the channel, hit the thumbs up, and share it with someone trading high yield ETFs. So, section 1, my buying rule. Only buy below adjusted cost. Calculate your true cost by subtracting all distribution collected. And then only buy when the price is 50, 75, or 100 pips below adjusted average cost. Once your ETF is in the green, stop deducting distribution. From that point on, use the average cost shown on your portfolio as your new baseline, and only buy 50, 75, or 100 pips below. Use limit orders to automate the process and remove emotions. Now, what does that mean? Simple. I bought Maro right here. I got her this Wednesday, I believe we got her. So, let's go to Maro right here. Now, remember, I only bought 25 right there. 25 shares right there. Okay? So my average is 23.75. This is a new position that I added to the lineup. So I start slow. I always start slow. You can start slow like me or fast. It's up to you. So 23.50. 100 pips down. Okay. Right there. I already placed the order and it's right there. 100 pips down, that brings me down to 22.15. I'm going to buy another 25. I like to buy it that way, slow. You could buy it how you would like to. Fast, slow, it doesn't make any difference. The bottom line, when everything's said and done, you need to be below your average cost. That's what's important here, okay? And you could start out 50 pips, 75 pips, or 100. My next buy will be 100. So that's how I buy them. Okay. So let's continue. So that's the rule. Let's go to the next one. Right here. What's my selling rules? Okay. Simple. Once I reach my target share count, for me, that's 5,000 shares. Okay, I want to have 5,000 shares. That's the count that I want to have. Now, and the ETF is trading at an all-time high. Okay, remember a few months back, Misty, she was trading around $45 or $46. That's when I mean an all-time high. Whatever the ETF you own, if it's trading at an all-time high. Okay, what am I going to do? I will sell half of the position, 2,500 shares, because I already have 5,000. That's where I want to be. So I won't buy back until the ETF has dropped 50% from the price I sold. Okay? I won't buy them back again. Now, the other 2,500 shares I'll hold to keep collecting distribution. Okay? So, why? Because I know these ETFs aren't designed to go to the moon. This rule locks in profit, protects my gains, and keeps my income stream alive. It's that simple. So that's why I'm going to sell half when I reach the desired share count. That's this rule I will not break. In fact, I won't break none of my rules. So this is my selling rule. Let's continue. Right here. Section 3. Start small and stay green. Start with just one or two ETFs at a time. Don't add new ETFs until your current ones are in the green. Price is above your adjusted price. That's what I mean when it's in the green, okay? That's what I mean when it's in the green. This protects you from NAV erosion and drawdowns. Once you're in the green, you're clear to add the next ETF and repeat the process. Build a strong lineup, one green position at a time. Right here. Remember, I had these and then I started adding. I added SMCY because everyone else was in the green. Okay, that's why I added SMCY. And then I added Motto because all of them are in the green. So once you are in the green, you're allowed to continue to add to the portfolio. That way, everything is under control all the time. Okay, all the time. All right, let's continue. So that is section 3. Okay, you start small. You don't buy more until you get the ones you have in the green. If you already have positions in your portfolio, don't add anything else. Get those in the green first, and then you can add. You can continue adding. All right. So let's continue. Section 4. Right here. Right there. Section 4. All right. Starting a new ETF strategy. Okay. Let's say you have no ETFs of these. Okay. You're starting brand new. Okay. Or you want to add a new one. You have all of them in the green. So this is what we're going to do. Use the declaration and the X date method. Step 1, buy 50% of your portfolio on Wednesday. That's the declaration day, okay? Before 4 o'clock. Before 4 o'clock, the market closed, you buy 50% that day. Then you'll be entitled to collect that dividend for this half that you bought, okay? Now, step 2. Buy the remaining 50% on Thursday, the ex-dividend day, or on Friday. This half you will not qualify for current dividends, okay? But once the first dividend hits, it's going to hit that same week on Friday. Recalculate your adjusted costs. So once that dividend hits on Friday, you're going to know what is your real average cost, because you're going to deduct the distribution that you collected, because you bought those, the very first ones, you bought them on Wednesday, okay? So then you deduct the distribution from your average cost to get your true cost bias. And then once you get your true cost bias, you do the system again. From there, you only add shares when the price is 50, 75, or 100 pips below your new adjusted cost, okay? Simple. That's the way you're going to buy. 50, 75, or 100 pips below. If you want to be more aggressive, then you do 50. If you want to be less aggressive, then you do 75 or 100. It's up to how you feel comfortable. Everyone is different. Okay? So this is a strategy to add new ones. Remember, at 4 o'clock, write down that price. On a Wednesday at 4 o'clock, write down the price, the closing price, and then deduct from that price whatever the distribution is. Deduct that. That's going to fall up to there, and that will be a baseline for you to check, okay? And see if it adds up to your 50 pips, 100 pips, or 75 pips, all right? So anyway, let's move on. Let's go to section 5. Section 5, right here. Section 5, option income booster, okay? Only sell cash secure puts when ready. Once your ETF is in the green, meaning no drawdowns, you unlock the ability to sell puts. Sell ATM at the money, cash secure puts at your own adjusted cost to collect maximum premium. If assigned, your cost stays the same. If not, you get paid while you wait. No risk, all control. Earn passive premium income with zero stress. Okay, let's go check that out, what I mean by that. Now, right here. Let's do Misty. Let's see Misty, because all of them are in the positive. But when you're going to do this income, it's better to be close to your average as possible. So right now, Misty is trading at 21.62. My average is 21.36. We're pretty close, okay? Now, you come here, trade options. You click on it, okay? And once this comes out, you're going to come here, and you're going to go always sell a put, okay? Sell a put, it means that you're going to buy shares at a particular strike price in a particular time. That's all it means, okay? So you come here, sell a put, okay? And here you have the different expiration dates, okay? That means that you're going to sell them by whatever these days are, whatever day that you pick. The further out, the more premium you collect. The further close, the less premium you collect, okay? Let me move from here. Let me put myself here for now, okay? So, what is my average cost with Misty? Okay, my average cost is 21.36. Okay, let's see 14 days. Let's say we move out 14 days. So we come here 14 days, okay? That means on August 1st, 14 days from today, this will expire. So you scroll down. What is my average? My average is 21.36. Okay, so 21.50. Okay, that's above my average. I don't want to be there. I want to be below my average. Okay, $21. Now, if I get Misty at $21 right here at 21, okay, I get paid today $65, and it's below my average cost. Okay, so I could do this play right here, and right now collect $65, and if it falls to 21 by the 14th, I get to keep them. It doesn't matter because my average is 21.36. But I want to go even lower than that, so I go 20.50, okay? 20.50, because 20.50 is around my 75 area, my 75 pip down. So if I want to do this play right now, I click here, okay, right here. I click here, okay, right here. I click here, and it comes over here, okay? And it's going to pay me. It's going to pay me $40, right? For one contract. Remember, when you do options, one contract is 100 shares. So I am saying that I will buy 100 shares, okay? By August 14, if the price is below $20.50. If it's below $20.50, I will buy the 100 shares and I will collect $40. Now, if it gets assigned, meaning that after August 14, the price is below 20.50, I get assigned, I buy the 100 shares, I collect the $40, and my average will be 20.02, but it doesn't matter because 20.50, my average is 21.36. I'm below my average. No risk for me. Whatever. No risk for me at all. Okay. Now here I could do 1 contract, 2 contracts, 3 contracts, whatever I want. So this is another way to start generating income. I'm going to start doing that with my portfolio. Doing that again. I did this at the beginning, but I had to put all my system together. So now everything is together. So I'm going to start doing that again. Okay? So let's continue. I could do that with any of them, okay? Because all of them are in the positive. You see? All of them are in the positive. Maro, I could do Maro, I could do all of them. They're all in the positive. So in order for you to do the options, first, you need to get them in the positive. And when you get them in the positive, try to do it close to your price, close to the strike price, so you get a real big payment, okay? Very important. So let's move on. Section 5, the income booster, okay? So let's move on. Let's move on. Right here. Section 6, the ETF and rotation. Okay. Performance standards. Know when to sell an ETF. Okay. These are my rules. Rule 1. Yearly payment must average at least 50 cents per month. So in other words, the minimum ETF that I hold on my portfolio needs to make a payment of 50 cents per month consistently. If payment drops below 50 cents, she's bench. No excuse. Now, no more buys. She has 3 months to recover or I'll sell it. Okay? Rule 2. The ETF must also recover its price after every distribution. If it doesn't bounce back, that's a second red flag. A strong ETF pays and recover like a pro. Okay, so if she pays $1, for example, she needs to bounce back to the dollar she was before paying. If she cannot manage to do that, I will not keep her either. That's another red flag for me, and she will be bench. So once I remove all the drawdown, she needs to perform the payments. So if it's not performing, you don't keep feeding it. You bench it. You monitor it. And if it still doesn't recover, you sell it. It's that simple, okay? This section is very important. That's why I have an example for you here, because this one is very important. So let's go to the example right here. If you've been following my channel, you know I used to own Alti. I had over 1,600 shares. You could look to my videos and you'll see. So what happened to Alti? Okay, this is the perfect example. I sold Alti because her weekly payments didn't add up to 50 cents. Do I like Alti? Sure. But I don't break my rules. If she climbs back up to 50 cents a month, consistently, she can earn her spot back in the lineup. Okay? Now, not sure what's all the buzz about Alti lately. Everybody's saying this is the best in the world and all this. Listen, that's hype. Show me the numbers. Don't show me hype, okay? In my opinion, she's not performing to my standard. And I'm going to show it to you right now, okay? No hype. I'm going to show it to you. So, let's go here. Let's go here. Right here. I use this to do this because my son is going to come in a few days to do that spreadsheet, so I don't have to do this. But I like doing this. Anyways, right here, Alti, right, $6.39, dividend payments. Okay, she's a weekly payer. Okay, I have this already set up, so we won't waste so much time me showing you this. So come here. Okay, I already have all this add up. You see, I already have everything add up there. Okay, so if you want to do it, then you can do it. But I already had it, so we won't waste time here. So June 5th, June 12th, June 20, and June 26. These were the last payments for last month. When you add all this up, the payment comes to 35 cents a month. So you know what happens to that? She's bench. She wasn't able to do it for the past 3 months. You know what happened to her? She's gone. Okay? No hype. She's not performing. She's not giving me 50 cents a month. She's out. If she comes back and gives me 50 cents a month, I'll be more than happy to buy her back again. Okay? So make sure when you hear all this hype about Alti, that she's the best, no. Prove it to me. Come here, see how much she adding up a month. Okay? 50 cents. No 50 cents, she's bench. Okay? So I wanted to show you that example. So let's continue. Let's continue here now. This one is very important. Okay? Next one. Section 8. Expected performance based on price and payment. Okay? Why was Alti bench? Because she wasn't making 50 cents a month. Okay? Because here's the evaluation, whether an ETF earns or keeps a spot in my portfolio. You have to earn it to be here with me, or else you're not coming along. Okay? From $5 to $11, she's about $6. She needs to come up with 50 cents a month. She's not coming up with 50 cents a month, she's bench. From $12 to $17, 75 cents a month. From $18 to $22, $1 a month. From $23 to $27, okay, the price for the ETFs. She got to come up with $1.50 every month. From $28 to $32, she got to come up with $2.50 every single month. And from $33 to $36, she got to come up with a payment of $3 per month. This rule, I don't break. No, I don't break none of my rules. But this one, this is going to show you which ETF to buy. And if it's in a good price. And if she's living up to expectation, continuing to pay month after month. So this chart here, very important, okay? That's why Alti is sitting down. As soon as she comes back to 50 cents, I'll be more than happy. And she's within these boundaries from $5 to $11. I'll get her. Any of my positions, right here. Any of my positions. Let me get rid of this already. Any of my positions here, okay? If you do the math on any of them, they will cover my expectation monthly. And if they don't, I bench them. So all of them cover it, okay? All of them. So this chart is very important. This is going to guide you which one to buy, okay? So now you know how to check them, okay? And by the way, if you find ones, let me know in the comments, because I want to check them. I want to continue adding, okay? I'm going to add as long as they meet this, they're in. So let's move on. Let's move on. Right here. No buys above 36. Okay, you see here this chart right here? It only comes out to 36. You see right there, 36, $3. That's it. That's where I close. Okay? Now, right here. No buys above 36. If an ETF trades above 36, I don't touch it. No matter how good the yield looks, I wait for it to fall into my buy zone before making a move. Okay, I wait for it. I'm going to show you an example here. Okay, right here. This one and this one. Look, let's do this one for an example. Okay, very important. I don't touch them. This is the new one that I got in. Okay, now look at this. Look at this. Let's see here. Look at that. September 12th, $50. I got her for 19. Okay? 6-7 months ago, I got her for 19. Okay? Right there. 1946. Okay? Right there. Now, tell me. Look at this. Look at this. You know when I buy it? Right here. When I start seeing this line here. When I start seeing this line here, that's when I buy it. Okay? That's when I start buying. See, you see this line? Okay? This is crazy. So it needs to be below $36 for me to buy it. I don't care if she's paying whatever she's paying in distribution. I won't buy her. Okay? So that's another rule I don't break. Why? Because of this. Okay? So I wanted to show you that. So you see it there. I got her for $19. Okay? I wait. They got plenty of them. I don't need to be rushing. Okay? So remember, 36 and up, I won't touch her. Okay. Second rule, no buys below 50 cents monthly payments. Okay? I don't care if the ETF is trading at $3 or below. If it's not paying at least 50 cents a month, I'm not buying it. Okay? So she got to pay 50 cents minimum. And it got to be with the charts here. Remember the charts, okay? If it's below $11, she got to be minimum 50 cents. If she not, I will not buy her, okay? So this rule, very important rules here. These are very important rules. These are rules to maintain your portfolio on the green all the time, okay? Now, right here. Sell it if it breaks expectation. If the ETF starts paying below its expected range, it's time to sell. Protect your capital. No new buys until it proves it can perform again. So if it drops below 50 cents, she's gone. I don't care. She is gone. No hype. She's gone. So these rules, very important rules to follow. Okay? Let's move on. Right here. This one is good. Section 8 and final section. When to start collecting income. Okay. When can you stop? When can you stop reinvesting and start collecting the distribution? Okay. For me, everyone is different with the share counts. But for me, once I hit my target share count of 5,000 shares, okay, because that's how many I want to have, and it's in the green, no drawdown. You see, I didn't put here NAV erosion. I only put the word drawdown. You know why I only put the word drawdown? Because once you get the ETFs in the green, they need to stay without any NAV erosion because they're able to pay you the distribution and to recover. That's all you want. You don't want them to go to the moon. If they go to the moon, great. But that's not what you're looking for. You're just looking for the recovery of the distribution. If they can manage to do that, then they're going to be in my portfolio and they're not going to have any NAV erosion. They're only going to have regular drawdowns like any other company. Okay? So, that's my green light to start collecting. Okay? At that point, the ETF is stable, performing, and your cost basis is protected. I can start collecting distribution and use the income how I want. And I won't hurt my position because I'm no longer chasing growth or fixing drawdowns. I'm in full control. My anchor system is working. Okay? Let me show you. Right here. NVIDIA. Okay? She paid. She's going to pay today. She dropped. She dropped a whole lot. Why? Because she has a payment to make, so she drops when she has these payments. So I'm going to show you. Look at that. Look at that drop. Right there. Let me see. Make sure I'm going to show you. She's going to pay 1 week right here. Let's go 1 week. Let's put a week of chart so I can show you here very clearly. Right there. See the drop on the 16th? That's on Wednesday. That's normal. She dropped. Look at that. From 1785, she went all the way down to 1688. And today, I think she went down to 1685. You see that big drop? Okay. Once you have everything in control, this will not hurt you at all. You don't care about this. Okay? Look. I'm up $839. And I'm still going to collect another $823 today, Friday. They're going to deposit this to the account. Okay? 823. So you see, this doesn't hurt me. Because you know why it doesn't hurt me? Because I have them under control. That's why it doesn't hurt me. Okay? So once you have your positions like me under control, that you could say they pay me and nothing happens, then you can start collecting the distribution and doing with it whatever you want. Okay? Very simple. Very simple. Okay? So, let's continue. So, right here, we came to the end. Final thoughts in the bottom line. Performance is everything. If a fund misses a payment, it's off the line. Period. No excuse. No exceptions. I stay disciplined. I stick to the system. That's how I stay in control and keep every position in the green. This isn't luck. This is the anchor system, a system for dominating high yields built on growth for control and income, designed to take me to $1 million and beyond. Okay? And beyond. This is the system. Let me go a little bit up here so you look at this again. This one is very important, because this is going to show you right there when to buy them. When to buy them and which one is the one you need to buy. So, anyways, let me get a drink of my coffee, because I haven't gotten a drink of my coffee. This is a long video. It took me a lot of time to put all this together. I want to help as many folks as I can. Boys and girls, everyone. But remember, you got to do your own research. But let me get my drink anyways. Ooh, so good. So good. Anyways. And there you have it. That's the whole system, the anchor system, okay? So there you have my anchor system from start to finish. So I hope you enjoy it. Okay? So anyways, I think I'm done here. So like I always say, may the winners be on our side. And I'll see you soon.